This is Eric Mwade. In response to a question about the uniformity, I want to make another video here on the subject. Now, I do recognize that it's not the easiest subject for me to explain, mainly because it is my own concept, and I guess it just depends on how I look at it. So the idea is just to try and explain when you don't see uniformity, what it means, and also an example of what is not uniformity, because I guess I've spent a lot of time explaining what uniformity is. Probably to make it clearer, I need to show you an example of what uniformity is not. So one thing about the uniformity concept is, as you know, it works in relation to the RSI. So let's say you have a wedge, or let's just say you've observed that if you take the highs on the RSI and if you draw a straight line, you have this break. So whenever a stock breaks out, in this particular example, if now this is the RSI, so if the RSI breaks out, that's a buy signal. And so what you do is, once you've seen that the stock has given you a clear buy signal, and you know it's a clear buy signal because the stock price went higher and higher and higher over time, depending on whether you're looking at a daily, hourly, monthly, it doesn't matter. So this buy point on the RSI gave rise to a very big move in the price. So you know that this level on the RSI is critical for the stock, not every stock, the stock or the instrument you are following. So what you do is you draw a straight line. Why? Because should the stock over time eventually come and tag that line and bounce, then this becomes a buy signal, because it is finding support at its most powerful trend line on the RSI. So that's a buy signal. If it comes and does anything that is uniform, that is uniform, that is uniform. And let's say, you have so many types of uniformity. You get sharp. All these things are uniform. They touch the line, bounce above it. You got this uniform action, which is a buy signal. Double bottom, uniform action, buy signal. Of course, this is a buy signal. So there are many ways. But now let's say if the stock comes back to this line and fails to hold above the line and cracks below it. Let's say there's no uniform action when it comes back to the line, then that's a failed trendline support test. And I'll show you some examples in this video. So why don't we begin with an example for what uniformity is. Now this is a very important chart for 2013. It is for the NASDAQ index, and 2013 has been a very good year so far. And what we do is we go back and find out where the stock gave us a good entry point. So I can see from my chart that this was a very nice entry point here, very nice low. So if you got in the market here, that was a nice time to get back in the market. And if you stayed long, assuming you did, you rode most, if not all, of this gain. So on our RSI, we know that the rally began. We can see that there was a top lines. So you can draw this line. Let me take that off. So you can choose to draw this line. Remember, you're using the stock to tell you where the buy signal is. So you can either draw the line there because it connects to the highs here on the RSI, the high there, that high. So you can draw your entry point here. You can choose to also draw a straight line from that point, because you know that this point gave you a very nice move in the NASDAQ stock here. So you know that's a very critical point for this stock. But I want to show you something that you have to adjust, and let me show you. You can see on the RSI here that there is a node somewhere around there. Hope you can see that. Hope you can see that node. And so what I prefer to do is draw that node there. That would be where I would draw it. And the reason why I would draw it there is on hindsight, and also remember, I have used this reasoning throughout 2013 to know when the market was looking like it wanted to move higher. So I know this worked. So I draw a straight line coming from this support line there. That node and that high draw a straight line. So that tells me that the entry point for this market was somewhere here, if not here, and ever since then we've been moving higher. The reason why I think the line is there from a uniformity standpoint is, take a look at every time we touch that line, you get a nice low on the stock, nice entry point, double bottom here, uniformity on the line, very perfect entry there. You got a double bottom here, uniformity, entry there. Now you can also look at this a different way and say, wait a minute, Eric, this here was also support line there, that small, take that off. So let's draw this again. Remember, this is educational, so we need to explain things clearly. So let's draw that line again based on that high there. So we are talking about this point somewhere here. This came very close but did not touch the line. It eventually touched the line here, so that's a better entry point. That's why you get that this move gave rise to a bigger move as opposed to this first box here which never touched the line. So we come and touch the line here again, uniformity below the line and back above it, perfect entry back into the market. You touch the line here, which is this little area here, you get a small spike. Actually it was this area here, correction. So this level here, take that off, draw the line again. So we're talking about this this level, I believe, is here, double bottom here, this entry point here, support here, this level here. So we see that, and then very close to that line there, nice entry there. In each instant, the market gave us an opportunity of getting back in the market, and it was very successful. So uniformity as an idea is legit. I know it works, but I want to show you in an explanation of why sometimes you have to be careful. So let's take a look at, here's a stock, doesn't matter what stock we're looking at, but here's a stock, DGAZ. Now I can see from this chart that the stock had a nice run, so I'm using the stock to tell me, give me information about the stock. So the stock had a nice run here. So what I need to do is go back and find out where the entry point was on the RSI, and what I do is I want to find the entry point, and I believe the entry point should have been somewhere, you can say here, and this is this level here. Why? Because it connects the highs on the RSI. There was a breakout and the stock was an entry here. Does that make sense? This entry point was almost the lows, and we come back and test that line. So I'm talking about, so draw a straight line here, that level there. Okay, so we come and test that line here, which was this perfect entry, perfect. All right, we come and test the line here with the double bottom here over time, which is this nice entry somewhere here. The stock had a nice or a short-term move. It wasn't the biggest move, but at least you are not losing money. You come and bounce off the line here, which was this nice entry point here. So this line, this blue line, is really telling us when to get back in the stock, or when to add on to position, or when to play this stock for a daily bounce, or maybe 1 or 2 weeks holding period. So now we come back. So take a look at this. So we are here right now. Let's say this is the chart right now. So what would you do? So what you know for a fact that if this stock bounces, the RSI is trading on the line right now. If this RSI bounces off that line, or if it goes below that line and you have uniformity back above the line, then you have another buy signal and you want the stock move higher because it has found support on the line. But now you have to be careful. I want to show you some other way you can also look at this. There's a line I've drawn here. You can't see it, but I'll show it right there. This line is just a line that I am drawing right now, but has a lot of explanation. Why? There was an entry point here for a breakout here. In other words, this blue line has been a very nice entry point for the stock. It's very odd, but you see uniformity here. Below the blue line, back above it, is this entry point here. You see another, we recaptured the blue line above the blue line here. which is this entry point here. We recaptured the blue line here, which is this entry point here. Let me show you something else. Remember, if you can take a few minutes just to look at this chart, you'll see a lot of information. We broke down below the line there, which is somewhere around here, and the stock went lower. We broke down below the blue line here, and the stock went lower, which is here. We recaptured the blue line here, and you can see the stock went higher. So uniformity comes in many shapes and forms. Okay, I'm just showing you. So you also see that at this particular time, hold on, let me show you this. So here you ask your question, if we recapture the blue line for a bounce and we recapture this line that has been holding us together, that line, which is uniformity line, if we recapture that line, then this stock becomes a candidate to watch, because if it bounces off these two support lines, so now we have the opportunity of owning this stock if it bounces off this level. Also notice there's a lot of information here. There is possible support line coming here from the lows. So a lot of things going on. We got support line from the price, which is this area here. You got double support line from these two lines here, which have been telling us when to get in the stock, out of the stock. Very simple. So we know if we bounce off this is multiple support level, we need to go long the stock. So let's go. So this was in November 26, 2013. Take a look at what happened. So a couple of things happened. A, no support came here on the price. We broke below that price. So there was no support there. Let's draw our uniformity line, which is this line here. Again, based on the highs there. So we know that this was an entry point from here. So that support, we were expecting this thing to bounce here. It did not. It failed to bounce. All right. And also we were thinking that there would be a support line coming from this RSI line here, which is something I drew to explain how you could have also used uniformity in and out of the stock based on this line. So you see that right there, we have not found uniformity support, and the stock became a sell here, and it became a sell there. You did not get any uniformity at this point here. So the stock failed to hold uniformity. If you are looking at this as a bounce candidate, you didn't get your bounce. You didn't get your bounce here where you were expecting it. You didn't get uniformity support here. So the stock becomes, either you ignore the stock or it even becomes a sell, because for the first time in a couple of months since this line was drawn here, you have not found uniformity support. So here's an example where uniformity did not take place and the stock actually lost ground, because this time uniformity did not confirm a buy signal. In fact, the lack of a uniformity action told you the stock was probably going to go lower, which is precisely what you get in this example, where you see that the stock finally gives up the ghost and we see the stock actually trending lower here. So no uniformity, no buy signal. Take a look at another one here, and this one I'm going to go through this one quickly. Is once the stock had, so this stock had been, so there's a line there. Once we break below that line, you draw a straight line, which is what I've drawn in green. The stock failed to hold that green line there with uniform action. So don't buy the stock, it's a sell. And it also formed uniform action above this line here. So you can see double top, touching the line twice, each instant uniformity. But now take note of the next time it comes to this line. Here, we go above the line, touch the line, and hold. Here, we hold that level. We don't, in fact, if you're looking for uniformity here, it should have looked like that. Back above the line, back below it. But what we get instead is, what you have in front of you is support. And what's interesting is, ever since the stock gave you this support level, instead of breaking down here, which happens to be this level here, take note what happened to the stock. And it stayed above the green line, which is this line that I'm drawing now, it stayed above that line until here, which is this sell point in this general area. In other words, knowing uniformity told you that something different, unlike here, was taking place here. We found support, and that was a different behavior in the stock, and this time that was a buy signal, or telling you the stock was acting strong because an area where you'd expect it to stall has now become support. And I know this is generic, but you can see that in reality it kept the stock above this level here, and that was good for this move that took the stock from about $6 all the way to about $42. So understanding uniformity when you see it, what it means, and understanding uniformity when it doesn't take place tells you something different could be taking place. Let's move on to the next example. Let's take a look at China here. This is a Chinese market, and what I want to do is, I know there's a high in price there, so that's a price high, and the stock has had this move. So I go and find out where the high was formed, and you see that there's a node here. So if I draw a straight line connecting the lows, it would probably come somewhere around there. So I know that this is a critical point in the stock's trading history, because this break, the break here lower, what corresponds to the high. So I know that high is critical to the stock. So what I do is, this green line, I draw a straight line there. So every time the stock has uniform action, like here, it went above, below, uniform activity, above, below. Let me take that off. So this is a double top. You got two uniform action, above and below. The moment we crack below this level here, that's uniformity. Take a look at how it gives you a nice sell point. Now this is not me, I'm not making up stuff, this is a fact. Ever since we broke below that uniformity, which is this level here, happens to be this level here, the stock had this massive drop. That's a fact of life. Uniformity is a legitimate idea. Also happens to be a break of this trend line support. So now take a look at this next uniformity action here. Happens to be this general area here, and there was a small pullback. At least it tells you which direction the market is going. So notice what happens next. You come back, and here there is no uniformity right here. There's no movement above the line and back below it for the first time here in September, which means that there's something changing, and you can see that kept the stock higher and moved the stock higher in this time frame here. That makes sense? This time frame here, there was no uniformity. Makes sense? So now you can say that here's an example of non-uniformity here, and that might explain why the stock had a nice little pop. Now I want to talk about something, because when I was preparing for this video, I noticed that there is a way you can actually argue that this is uniform, and I know it's gonna take a look at that small node there and this side of a node there, and then cut this in half there. That seems uniform to me. In other words, hope that makes sense, that this let me pick a different color here so I can explain it, that this side looks uniform to that side, this one half and this second half. Let me remove that. In other words, this area to me I can also argue, but this is a stretch, that this is uniform action. This looks like it looks like this. And that's what I'm like. I mean, it's not perfect, but it looks like that's uniformity, and so the line is here. So you can say that is uniformity. That's why if you draw a straight line, now this is just showing you that uniformity. So a break of that line, which is back, also could suggest that this was a sell point somewhere here, this general area, sell point. And if you extend that line, notice that how it gives you, so we know that if we extend that line there, the blue line, we have uniformity here, okay, above the blue line, back below it. That's a perfect sell signal because the stock did eventually lose ground. We come here, we hit this line once, which is this top here, but notice now that we are struggling. There's no nice uniformity. You want uniformity to be nice. Straight line, uniformity, that's uniformity. Straight line, double bottom, that's a clear uniformity. But whenever you have something that looks like this, that's not uniform action. It's not smooth, so that's not uniformity. And you can also argue that there's no good signal here because it's not uniformity. So you can't necessarily use the signal in this particular setting here because it's not the most perfect. You can argue it is, but it's not. I know that's confusing, but the thing about it is, take a look at this. This is perfect uniformity, perfect sell signal. This is perfect uniformity. I think that's a nice entry point. There's no uniformity here. Stock moves higher. Somebody can argue that, this is kind of like a uniformity here. It's nice, it's up above it, but also notice that everything is very close to the line, so not the best. That's why this is not giving you big moves. No outright uniformity here, no outright sell signal there. I hope that makes sense. Now remember, for you to really understand this, you have to start understanding the minute details of how it works. And I guess what I can say is perfect uniformity here, double top, perfect uniformity gives you better signals. Let's just say that. The more perfect the uniformity is, the more perfect the signal is. Let's go back to the first chart for the NASDAQ. If you remember the NASDAQ, all we had to do was draw a straight line here. Take note of how this is nice. All these are nice uniformity action. Nice. There's no confusion here, no confusion there, no confusion there. In fact, even you can say that was close to the line. No confusion, and you get good moves in the stock each instant. Each instant gives you a nice low. So we can say that the more clear the uniformity is, the better signal you get. Let's go to another one here, and I believe this. Okay, this is BREW. Doesn't matter. What I want to show you is what happens. So take a look at this stock. Had a nice move. Bam. Okay, so we come back here and find out that there was a wedge here that began this move. So there was a breakout here, which happens to be this level here in price. So here, there, nice entry, and since then the stock has had a nice run from about 750 all the way to 18. So what we do, because we know, let me take that off, is we know that this was the entry point here. We draw a straight line somewhere there. So notice perfect support on the line, perfect entry point. Perfect support on the line here, perfect entry point. Come here, we go below the line, recapture it. You can see that was a double bottom. Nice entry point, not the best, but you got a nice small move there. But now there is no uniformity in this case here. There's no uniformity here. We're actually trading below that line. So that is failed uniformity. You want to sell the stock because now it's not finding support on its buy point. Now, I have to explain something here. This is how it looks right now. So let me draw the line again. This is how it looks right now there. But what happens if, let's say, down the road it does something like that, and this becomes a very nice V-type formation. This level here becomes a V-type formation. Then this is going to be your entry point here when it breaks out above that level. So right now it is failing to hold uniformity. It's a sell there, but we have to be careful because maybe it's forming the second half of this move. Maybe it's forming V below it, above it. So you watch it. In case it recaptures this level here, then somewhere around here will be your entry point. For now, it has failed. Uniformity has failed. So you cannot use this for a bounce until you see uniform action back above it. So let's say the next couple of days you see the stock break and do something like this. That's definitely confirming that this here was a failed uniformity test, and the stock is now on a downward move, and eventually it's going to move much lower. Let's take a look at one other one. And here's a stock that had a nice run from, see here, from here to here, talking about $5 to about $10.50, 100% gain. So we see that there is a wedge here. So this was the entry point somewhere here. Okay, so if you draw the line properly, it actually comes out to around the 50, somewhere there. Okay, so notice there's no uniformity support there. There was no support. It's very obvious. So you know something is not right with the stock, which happened to be this area here. You never got a bounce. In fact, you got movement lower. And what I want to show you here in this particular example is how you can flip the script. Notice what happens. Uniformity here, but it is now beneath the line, which happens to be this high. So now you're using the opposite. What was supposed to be support has now become resistance. So you've come all the way and you have uniformity on the line here. So that becomes sell signal. If this thing has another uniformity action, like if it goes like that and you have another uniformity underneath the line, this level here is going to become a sell signal and the stock is going to move to fresh lows. So that's how you can use uniformity when it happens, when it doesn't happen, and how you can adjust your thinking. In this instant, there was no uniformity here, so that's a sell signal. This has become a sell signal on the backside of the back test, so that's a uniformity now. And also if it takes place here, somewhere around here is another uniformity, but this time on the sell side. Eric Moade. It's a long video, but trying to explain something. Peace and blessings. Woo!